Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. I don't know whether Alex, can you admit people when they want to join the Hangout here, or do you see that on your screen?
Yeah, I don't have to admit them. Just if I want to deny them, I will have to click, but I'm not going to deny them, of course. I
Right
don't
on.
see it live on YouTube yet. Oh, there we are. Okay. Cool.
I think we're rocking the YouTube thing. Yeah, there we go. Hopefully the hopefully the audio sounds okay.
Hopefully the
We're continually experimenting with different ways to do these daily briefs here for you guys and the daily brief summaries. So today we are trying Google Hangouts, the actual old meeting platform for Google. I think they call it Meet now. And we're streaming this video through OBS. So, by all means, if you have any comments, questions, concerns about the call and the meeting, feel free to drop us your feedback and let us know whether we're doing a half decent job. I think probably the most important thing here everybody should just take away from this is we're trying our best. All right, so good morning. It is, where are we here? It is Wednesday, August 14th. It's interesting when my mouse went over the time bar, the screen went blank there. I'm not quite sure why, but that's in the meeting. But I see the recording on OBS is still doing its thing. We're actually not recording the meeting itself. We're recording the screen here. So you won't see the comments and questions and stuff in the lounge, the people that are in the call. You're only going to be seeing the OBS screen that's shared. Alright, so when I did that mouse over, because I noticed that the OBS didn't change, but if I do the mouse over this time, the screen goes black there, so I'll have to remember that going forward. Alright, so I'll try and refrain from doing that. What happens if I go over here? Does that change it? No, so it's just on this screen when I do stuff on this screen. I don't know how many people are actually allowed in this little Meet application. We got 1, 2, 3, 4, 5, 6, 7, 8, 9 right now. So we'll see if that tops out at 10, but we'll see how it goes. Okay, so back to the frivolity. What can we say today? Dashboard's still updating, so Sjord actually is on a little bit of a family holiday right at the moment. Interesting to see we got the TRI Twitter feedback up and running. That's good. I thought it was really interesting to see that John Bollinger put out a tweet this morning saying that Twitter user interface right now is so crappy he doesn't even want to use Twitter anymore. So go figure. I've been tweeting out quite a bit of stuff about bond markets and international markets this morning. I think we talked a little bit about this yesterday and the day before. We had some interesting international econs come out, and they're not happy at all. I don't know whether you guys remember. Let's see what happens when I move that screen over. Did everything go black? Yeah, I hope not. It looks like I'm showing.
Yep. I'm in black right now.
Okay, I see on YouTube this little IEA stock, but I noticed that the isn't that interesting?
So we seem to be fine on YouTube, but in the Hangout we're in black.
Yeah. So let's see how I can do this. If we go, bear with me here a second. We'll stop presenting, and then we will present some more. We go like that, and then we go like that, and you will go like that. Oh, because it was a window, that's why. Still getting used to this stuff, people, so bear with me here. That was this one, I think. Let's see what happens. You are presenting your screen. All right, so am I showing that? Yeah, I am. Yay! All right. International econs. Holy train wreck, Batman. Chinese data. You can see industrial production came in almost a full percentage point less than what was expected. So that really rocked the market. You can see the Eurozone economic sentiment numbers came in much, much worse than expected. Interesting to see that the Japanese data is really outperforming here. So we might actually see a resurgence in Japan, but I think what's caught the market's attention dramatically is these huge misses by China this morning. Was also hearing a lot of talk about German, and I don't know whether maybe we have to put Germany on here in particular, but I'm hearing that a lot of negative data came out of Germany. Let's see if we show that. Alright, so Monday we had some inflation data. Wholesale prices, looks like everything came in line. This was the Euro data that we talked about just a moment ago. Here is the German data, and you can see absolute train wreck here. And current conditions, also absolutely train wreck situation. So, put it all together, things are looking a little bit tough out there for the international markets. You can see like industrial production year over year, wow, minus 2.6%. Month over month, big miss there as well. So, what's really weird is that I remember when I was in Europe last summer, talked lots and lots about how it just felt like things were just way overblown. Everybody was driving new cars. Everybody was, the sky's the limit. We're going to rock and roll. And so now we're starting to finally see, Europe contracting here. When I was reading sort of the rags this morning, the situation in Hong Kong's getting worse. What I'm hearing is that the Chinese are actually massing troops near the border with Hong Kong, and that situation is just not getting better. So, put it all together, bad economic news plus massive political instability. I hate to say it, guys. This is starting to look very dangerous. And, we know that a recession is long overdue. We're here in 2019. Come on. Now I need to get Hangouts to cooperate here. So I'm going to go back to the chart. I just wanted to show you those econs. Hold on a second here. Let's see, we want to stop presenting, and then we'll want to go back over to present, and we'll put this window away for now, and we will and I guess we could probably do, actually why don't we try and do that, the whole screen here, your entire screen. Hey, there we go, that actually might work a little bit better. So, are we all seeing Mr. Greenspan? There he is. I've sort of talked about this before, and it's a bit amusing, but nonetheless. I actually think that there's really only one real rip-roaring bull market right now, and that's in the bond market. I do not believe that the yield curve has actually inverted, and I included this dynamic yield curve study from stockcharts.com, and they're still showing that the curve is normal. I've heard just an absolute ton of rhetoric this morning from those talking heads in the media again about how the yield curve is inverted, and I hate to say it, guys, I still, call me crazy, but I still do not believe that the yield curve has gone inverted. So call me crazy. you can see how close the 30-year is to the Fed funds rate. I mean, it's very, very close, but it hasn't inverted yet. I think probably the most important message that I'm seeing here is our inflation-deflation guide now sitting. You can see this number. The number is right here. You can see it. It's at minus 28.21. Or basically through that 26 level. When I did up this chart this morning, it was at 27.9, so it's even accelerating even further since I did this right up this morning. But I think this is probably the most important chart for us to pay attention to. Lower highs and lower lows, of course, defines a bear market, and in this case, reading above zero means that the people that are actually putting their money to work is anybody else on YouTube watching getting funny static in the background? Joshua there is saying that he is. It might be that Big Brother's just listening from you down in LA, Joshua. Who knows? But this is basically a spread between the tips and the TLTs. Ryan Worrell is saying, no, YouTube seems fine for me on both and no issues. So, oh, that's my fan. Maybe if I turn this fan off, you won't hear that? Isn't that funny? I'm in my little second bedroom that doesn't have the best airflow, so I have a little fan in here. But is that any better? I turn the fan off. I don't know whether that makes a difference or not. But anyway, hopefully we'll get through this. All right, is that a little better, guys? YouTube people over on YouTube, does that make
perfect?
Does that actually make a difference?
Yes, it did.
Oh, okay. Sorry, guys. All right. So continuing on here. Those people that want inflation protection, that's the tips. They have basically an inflation index that pays out. If there is no inflation, then there's no reason for that payout to happen. Usually investors will bid up the tips, paying a premium for that inflation protection. So if tip prices actually go below the regular bond contract, and this is the TLT, this is a bond ETF, then that gives you a negative number here, and it just simply means that investors, voting with their pocketbooks, don't really want to pay up to that inflation premium because they don't think inflation is a problem. So I think that's basically what's going on here is, and another way to look at this, which probably will make it a little easier, is what is the biggest, other than unit labor costs, and unit labor costs are obviously 2/3 of all business, but what is the next sort of big cost in economies, excluding labor? Anybody? Let's see if anybody on YouTube knows this. And actually, we got a chat box here on the Hangout. Does anybody else know? Hey, Joseph, you got it. Way to go. Energy. So if we go look at energy prices right now, they're going to be a real sort of determinant in whether we are in inflationary or deflationary environment. And I was actually a little bit surprised when I pulled this up this morning. What do you think? What do you think the trends are here, guys? Are we in inflation or deflation? I.e., deflation trends are heading down in energy prices. So, hopefully everybody goes, holy crap, deflation, right? So bear, 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 bear. Bear for a while, bear forever. Our silly natural gas just never turned around. Bear and uranium prices, and of course the energy sector stocks, they are in a massive bear and pushing to new lows here. So you put it all together, frankly speaking, it doesn't surprise me that we are getting that deflationary push. And in this kind of environment, I think it's very difficult for the Fed to continue their aggressive rate raising policy. And it seems to me that we've gotten to the point now where I think, and actually I even have that on here. This is a, whoops, that's not it. Where the hell are we? I got to run here somewhere. So many charts. Oh, I guess I got rid of it. Here it is. This is an interesting commentary. Thomas started looking at this a while ago, the spreads of corporate interest rate market versus Fed funds. Interestingly enough, Fed funds and the short end of the corporate interest rate market, this is the, I think it's the September contract. Eurodollar 3-month, right? September's right here. They're pretty much in lockstep. Right? They're and do we have a financial asset crisis in the works? That is basically. We're gonna put that away. That is. Maybe I put it away. That is this conversation. And I don't see a credit crisis here right now, right? Spreads are almost exactly the same. And if anything, I don't think it's going to be a credit crunch. I don't think there's too much lending going on out there right now in the economy. I think this is all about, inflationary pressures, i.e. oil market, very weak. And you can even see the Fed funds futures themselves are actually pointing down. And I'm hearing talk of people talking about the Fed like lowering rates by 50 basis points now. Who knows? But clearly they are on the lowering interest rate path. And, I thought what was really interesting, the comments coming out of Fed was that they're actually thinking about doing more quantitative easing. So they're going back to sort of that thinking again. And frankly speaking, it doesn't surprise me. The issue here, though, that I have, and this is what's kind of bugging me right now, since the yield curve is not technically inverted, and usually yield curve inversions paint a recession within 6 months, I don't think that we should be planning for recession just yet. I think it's going to take some time to develop. Now, if this does crank below short rates, then I'll change my tune. But as I showed you on that tweet, yield curve has not gone inverted yet. I'm still saying normal. And what I'd also find too, hopefully you guys can see, dot-com boom. Can you see that M there in price? See how it went up, down, up, and then broke. And then in the Junior Bush recession, up, down, up, break. You see that M as well. So we look at the stock market right now, and what I see is just V's all over the place. Both V tops and V bottoms. And so, I was commenting with somebody, just sort of ranting on Twitter, because, Brian, he loves to rant. This is what I'm thinking, right? We're in volatility heaven. Mr. Von Clownstick, and you have to Google Jon Stewart prior to 2016. I noticed as soon as he won the election, he stopped calling him that, but I love that, that nickname. I think he's basically just turned the stock market over to Goldman Sachs and just said, you know what, go have some fun. If I scratch your back, you better scratch my back when I need it. And they're basically just having a field day with this market. I think you could make the argument. What's really interesting is we have this very powerful high to trend line to low, so high off of this cycle, low off of that cycle trend line. I think that that's the dominant trend line right now in the marketplace. And if we notice that we came down, played with it here, rallied away, played with it again, then lost it, then rallied right back to it, then recaptured it. Look how close we came to it again here. And if we actually drill down, this is a weekly price chart. If we drill down and look at this price action in particular, notice that prevailing trend line there. You'll notice that there is a big juicy gap right there. Right, so there is that low. And maybe what we can do, I don't know whether I can do this or not, but let's try. Sync to all charts. Yeah, there it is. Ooh, cool. All right, so there is that long-term trend line. Notice we have A, B, C, D. I think we have to come back down and fill in this big old gap. trade back right against these lows, maybe even eat a bit of this tail here. And notice that'll bring us right back to that long-term trend line. So I that's sort of what I see going on here. And also, too, I mean, gee whiz, guys. I mean, this is a 4-hour chart. If we change this to a daily chart, interesting. On the dailies, it doesn't actually print a gap there. But on that 4-hour, I guess what I was seeing was, man, that's just one big gap from all the way up there right to there. Could that be filled in at some point down the road? Absolutely. So, my general feeling is we do not have the recessionary message yet. Given the situation in Hong Kong, given the situation now, the economic situation in China and Germany, this is a very dangerous market, but extremely volatile. And I think that's really the message of this market. If you can trade these volatile swings, look to buy puts up top, look to buy calls down below, great, awesome, rock and roll. But this is not a happy-go-lucky market, in my opinion. This is extremely dangerous. So we'll have to keep an eye on this as we go forward. Looking at sort of broader market implications, I don't think it should surprise us one bit now. Germany is basically saying they're going into recession, and as I just showed you a moment ago, where is the bull market right now? I actually think the bull market is in the bond market. And keep in mind, bond markets, they love recession. Why? Because what it means is the future purchasing power of money is going to be stronger, not weaker. So as a result, bond prices can go up. But I would actually make the argument that I don't necessarily think that people are playing the bond market for yield right now. I don't think they give a fuck about yields. No offense to YouTube and all that for my swears. And, again, sort of tweets that I put out this morning. Mr. Greenspan. And he's 93 years old. Can you believe that shit? He's 93 and he's still going to work every day. It's remarkable. But anyway, someone wants to join the meeting. All right, well, we'll let you in. Way to go. And actually, how many people? We got 15 people in here now. Oh, no, we got 11? How many people we got in here? So it looks like we can even in these meetings have more than 10 people, eh? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11! Ah! So I think we figured out a hack to try and get around Google and all these silly Hangout issues. Anyway, sorry, totally off topic there. Now I have to figure out how to put this away now. Yeah, look at that. You guys are chatting here. Yeah. Well, I think we got to work around here. And Colleen, I think I saw Colleen in here. Are you having audio issues? Can you hear me any better? Anyway, sure hope she can. No audio issues? Excellent. Great. All right, cool. So, I put out a tweet this morning that I don't think that people are buying bonds for yield right now. That's not why they're in the bond market. They're in the bond market right now because it's a guarantee of principal. Oh, look at that. Here comes Ryan. Excellent. Good to hear, Ryan. Nice job. And is that our Ryan that was in Vancouver with us, or is that a different Ryan? But anyway, okay. So, long and short of it here is I believe that people are running into the bond market because they understand that we're very, very late in the economic cycle. And please, everybody understand, when this stock market does break, exactly when, nobody knows for certain, but usually stock market loses 50% of its value in recessions. We don't have an M here yet, so I don't think it's just yet. But, money managers working on like quarterly basis and stuff like that, if they're sliding into bonds because they think the economy's unwinding, and of course we got lots of data around the world showing that it is, could they be front running the trade a bit? Sure. But, where is 50%? When this thing does eventually break, maybe we'll throw it on here just for reference purposes. We topped out at just a little bit above 300, so that means we probably need to come back to somewhere around 150 or so, somewhere in that area. Why don't we make that yellow? We'll keep that in as a reference. And gee whiz, all that's going to do is just bring the stock market back to the original breakout levels from the 2000 market. And like Brian's long-term fear, greed cycle talk, all that kind of thing, that's the mark at which now once that's done, then we enter into the next growth cycle. So I don't know when that's going to come, but you can clearly see the M top here. This was the dot-com boom. You can clearly see the M top. It's a little bit sloppy here. But there's a nice M there, a nice head and shoulders breakdown there, junior Bush market. And you can see, this number here was 157, and we bottomed at, 75, 76, 77. Basically, well, that's weird, I said that word twice. Basically 50%. And that's very normal in recessions. And then same thing here. Topped out 150, 160, and in this case we went all the way down to 70, 50% correction. So I don't know when this market's going to break. I mean, nobody knows for certain. But what I think we need to do is we need to be hunting the M's. And as long as we keep V topping and V bottoming, I don't think we're there yet. And what I'm really concerned about, which kind of pisses me off, is, of course, the media got the yield curve inversion shit wrong again. If you don't want to listen to Brian, and that's fine, I'm not going to be insulted if you're like, Brian, I don't believe you. I need to go to somebody who I think is a little bit more educated in the market. Fine, listen to Mr. Murphy. I mean, this guy was an old timer in the market when I was just starting out. This guy's been around forever. He's like Greenspan. He's probably in his 80s or 90s. And you can see here, this is today, right? The yield curve is still normal. So again, and it's so funny how I keep doing this, but gotta get pissed off at the media. They got it wrong again. And here comes Kevin. I don't know whether you guys on YouTube can hear that bing bongs, but every time somebody wants to join, I get a little bing bong. Hey, there he is. Hi, Kevin. Nice to see you, buddy. Anyway, so the point of the matter here is I think volatility is the name of the game here, guys. Get used to it. This is going to be up and down like a horse. Now, sort of, like what are our proxies of late to sort of measure that volatility and how things are going? I really like to follow, let's see if I still have it on here. Well, first this, but did I get rid of it? Maybe I should put some of this stuff away. I'm getting a little bit overwhelmed here. Okay. So this is our fear proxies. And we've got the Japanese yen pressing highs. We've got the gold on a daily basis trying to break out again. We got the bond market just going absolutely insane. But interestingly enough, and I'm not quite sure how to interpret this, but it looks like Bitcoin is not part of this rally. I got the impression that Bitcoin was, to a certain degree, a fear proxy, but maybe not. I mean, the market will do what the market does. All of these fear benchmarks, you can clearly see they've all broken out to the upside. Bitcoin has not. I did notice when I did sort of my side-by-side comparisons, we see that the stock market here in yellow actually just M'd out, and the energy market in teal, it's come down. Highly, highly correlated energy and stocks, and that makes sense. Basically economic expansion and demand for oil. And then on the flip side, we've got the bonds, the yen, and the gold all moving up here, but Bitcoin is not. So I thought, well, what the heck, let's maybe put Bitcoin on the growth curve and see whether it's actually a growth proxy. And the interesting thing is you can see, it's not really part of that either. This is probably a really good conversation about Mr. Tom Lee. was saying that he thinks that Bitcoin is just a completely uncorrelated asset, and so as a result, for money managers, portfolio managers, it's a great way to reduce overall portfolio volatility. Maybe Bitcoin isn't part of the fear proxy, bonds, yen, gold, and it's not part of the growth proxy, stocks, crude oil. It's on its own. I don't know. Little disappointed because I was getting comfortable with this thesis about Bitcoin being sort of a flight to safety. So, maybe it's as we always say in the market, right? Strong opinions loosely held. I have to sort of sit and think about where does Bitcoin fall into this crazy asset matrix. I suppose we could talk a little bit more about stocks before we leave that conversation and jump over into crypto. Geez, it's already 9:33. Where the hell did that half hour go? Anyway, we'll finish off with just some thoughts. Canadian financial sector. I've talked about it repeatedly that I believe the Canadian actually before we go on, we talked just there a moment ago about how energy prices. What's the general trend here? Clearly, the general trend is down for energy prices. And I would make the argument, if we look at things like international currencies. Let's see, I guess we'll just load up a new one here. The fact that the energy markets now are all rolling over in earnest, this isn't going to bode well for the energy-related commodities. We talked about the metal-related commodities, things like the rand and the Australian dollar, looking very, very weak. And I believe, just talking about Australian dollar and South African rand, I believe this has everything to do with things like copper, professor of economics, still working its way lower. Did make a new low here. I didn't really like this bot setup, but nonetheless, AB equals CDs. I could very easily see copper work its way down into these levels. The econs, of course, coming out of China and coming out of Europe are just horrific. So, and I've heard that the scuttlebutt is that the German auto industry is just absolutely reeling right now. And that, to me, that makes complete sense because for years and years and years, all I see on Vancouver roads is Mercedes, BMWs, Volkswagens, Audis, right? I mean, just tons and tons of these cars. So that really should be checked. That isn't normal. So, if the German economy is reeling and like I said, their auto industry is in trouble right now, maybe we're going to see a long-term check to that. But copper, of course, going into wiring and all that kind of stuff, big industrial component. And I think it's these kind of trends that are really hurting things like Australia and South Africa. Interesting, too, you can see palladium, which has been sort of a darling of the market recently, is looking a little dangerous here. Things like aluminum along the lines of copper, just looking like an absolute train wreck. Zinc, which is another sort of big industrial metal, looking pretty tough. Even platinum, for that matter, has not really performed that well here recently. The only markets that are performing well, it appears right now, of course, is the gold and the silver. And as we said just a few minutes ago, I think that's more to do with things like flight to safety, got to get your money out of the system kind of idea. Let's run into government bonds. Let's run into the strongest currency in the world, Japanese yen, it appears now, and let's run into things like gold to be sort of safe. Industrial-wise, these metals are looking extremely dangerous. The interesting, and that's a good question, Robert, right? Robert asks, I wonder what the cost of production of copper is. Keep in mind, and this is what's scary, guys, is if we actually zoom out on a copper chart, I remember for the longest time in my career, right? This is sort of where this was when I was a broker and was in the heyday of my sort of commodities career. Copper historically sat between about $1.25 and about 50-60 cents a pound forever, right? And you can see where the base in copper prices were. Then the Chinese announced that they were going to rebuild their economy, and all of a sudden copper prices went absolutely insane. And you could argue very much like this was the front end of that commodity cycle, and a lot of commodities went zipping up. And I might make the argument, sitting right here, right now, we're still pretty darn vulnerable. This was the 2008 financial crisis. We could very easily AB equals CD and take us right back down to that original base where I believe this is where the cost of production really is. So that's a bit shocking, eh, Robert? No! Anyway, so what I was trying to get at there a few minutes ago was that, it shouldn't surprise us at all that the metal currencies don't look very happy here, with all those industrial metals just looking horrific. Australian dollar, South African rand. What's scary to me is, you saw, the copper markets rolled over a while ago. Zinc and aluminum, they rolled over there a while ago. The energy markets are just now rolling over. And gee whiz, look how weak the Canadian dollar's looking right here, right now, and the Russian ruble. And you can see ruble might actually flash a trending sell signal if this starts to break down any further. So far, the Canadian dollar is hanging in there. We'll see how it acts against these key lows, but it's an interesting tell that the energy markets are starting to look waffly, and now these markets are starting to look a little heavy here. Okay, where else did I want to go? Oh, geez, yeah, we're getting pretty late, so let's head on over to crypto now. So we'll put that away. The only other thing I wanted to mention, and this is the whole reason why I went down this road to begin with, Canadian real estate market is just stupidly ridiculous. Fixer upper or piece of shit. Turns out the piece of shit that you see trading last trade is like $1.5 million for a piece of crap house here in Vancouver. I mean, it's just ridiculous. And we can clearly see the anecdotal evidence. Every time the market seems to get up into this sort of 38, 39 area on the Canadian financial ETF, they whack it back down. And look at all these happy faces all over the place. We can even put another happy face right in here. And I might have even just gotten a little too cheap-assy to try and get my puts here. I haven't gotten filled on any of my orders, bastards. If anything, there is still a cheeky gap up here. I'm hoping for a nice little counter trend rally back up against the highs to get these puts on, but not getting any fills here. And now we got another big M coming in here. And if it's one part of the market, I don't actually think that the U.S. economy does too badly through this upcoming recession. The recession in the United States in the early 80s wasn't that bad. I mean, in comparison to the global recessions. And I wouldn't be surprised to see some sort of repeat along those lines. But something like Canada, oh boy. And you can see these Canadian banks, Canadian financial institutions, this is now just a massive brick wall of resistance up top here. So, the writing's on the wall, folks. And V-bottom has to be tested, V-bottom has to be tested, V-bottom, V-bottom, and V-bottom. Look at this big old gap right down here, total island bottom. So, oh boy, just be prepared, especially if you're Canadian. Don't go and take a big-ass fucking mortgage on a house right now. That's just asking for trouble. Okay, so enough of that talk. We'll move on over now to crypto. So, interesting disconnect here. What's going on with Bitcoin and the other fear asset proxies. Is Bitcoin now moving with the stock market? Tough to say, really tough to say. If we look at Bitcoin price action in itself, and maybe just simple crypto overview, these M's that we saw in the spreads come in earlier, they are still active. You can see Litecoin is actually has it? Let's see, what's that spread? That spread's 0.432. sitting point 385. So Litecoin has broken through its most recent lows. So that doesn't lend me with a lot of confidence that the market's rallying. And of course, we all remember the basically the past 4 or 5 months. We've been just talking about Litecoin halvening. Why did the market rally? Makes a lot of sense. Now that fundamental event is basically history, it shouldn't surprise us to see the market go back in the closet now. Does Bitcoin actually confirm this most recent M action here, this low here? Keep in mind this is a 6-hour chart, so this will be zooming all over the place. But if you do build this study and you want to refer to it, it has a premium here of $111.37, and we're sitting right now $116.98 roughly. So we'll keep a close eye on that to see if we have confirmation there. And then down on Ethereum, we're still a little ways off of those lows. That was $1.01, and we're sitting right now at $1.25. So we'll keep a close eye on that. It's definitely the market's still pointing down, no doubt about it. And of course, we're gonna have to wait some time. This is gonna take some time to develop. You can see how long these bottoms take to actually pivot. We might get one of these sort of V-bottomy type action in the spreads, but my hunch is, you can almost see the rolling top here. So my hunch is there's got to probably be some serious test of the parity level here, and then we'll see some reaction. If we take a quick boo at the weekly charts, we had sort of talked about this before, that this clothesline AB equals CD, in my opinion, is still valid. But, and we made a new closing high there on Sunday. But a pullback into here, this was all open air in here, and there's the 13 EMA sitting basically at the 38.2. Doesn't really surprise me that we're coming back down against these support levels. We haven't really looked at the other majors, so we could take a quick moment and look at that. Litecoin, of course, is our halvening proxy. That halvening event, I think, is played out now. I'm not quite sure. We're actually coming down in a real hurry against this reload zone. Got to tell you guys, I'm a little concerned here that we might actually even see new lows here. Why do I say that? If we go AB, and then clone that, CD, you can see this AB equals CD should take us right back against those original lows. So actually that's good. I thought, just eyeballing this, that we were projecting down to new lows. So if anything, I'm a little encouraged that it doesn't look like we're going to see new lows here just yet. Internals, nothing really to get too excited about. You can see how the bulls basically have fallen asleep here. We have this massive high over here, then few highs that are all basically the same level, but then you notice this is 727,000. This is 683,000. So if we get a volume bar less than this low here, that's 355, then we get a signal that the bulls have fallen asleep. And you can see right here, we did 237, and that was this little candle right in here. So bulls have fallen asleep. We'll see if the bears wake up in earnest. You can see they're pretty active right here. They might also fall asleep too, which means that we just go into drift and malaise mode. That's fine. Never did get really the most powerful divergence here in the MACD. I think you can clearly see on our Willie. I don't know, did he actually get stupid? Oh, he did. So weekly stupid, that should have been a big warning sign for us as well. But you can see the M, and this is all slowly working its way lower here. So there's really, there's no reason to get overly bullish here whatsoever. If we look at Ethereum, probably same sort of story. We might have AB equals CDs take us to new lows here, though. This could get dangerous. As I think I've said recently, it looks like Ethereum's still stuck in this moving average sandwich. So we're coming up against these lows. And there should be a real interesting battle. But you look at the internals, Looks like bears were pretty awake, or excuse me, bulls were fairly awake here. And then they've just sort of backed off, but I don't really have a clean top here, so that's kind of interesting. Bears at the same time too, they seem to be very quiet as well, so a little suspicious activity here. You do see on the weekly basis the bear div in MACD here. Willie never did get stupid here, so that's interesting. But if we look at the RSI, you see a cute little M up top here, M in the OBV, and actually maybe I should change that to like a yellow or something. So you can see that, there it is. So you can see little M in RSI, little M in OBV, that's our DAVO signal. So it shouldn't have surprised us to see that that price was going to have to come down here. And I guess we should do AB equals CDs here as well. So boom, boom. Let's see, did we take out these lows yet? It's 191.91, 190.41, so 190.41. And today's low is 195. So we haven't taken out this low. If we do take out this low, then that also, ooh, so there you go. So if this price action remains the same, actually it's suggesting new lows on Ethereum. Boo, yes, boo. So all those bulls, you would really like to see Ethereum hold these lows, please, please, please. If not, then I think we actually have to go down and take out these lows from the winter, which is a bit sad, but nonetheless, I think it, you know, considering we just never saw any performance out of Ethereum through this rally, I think that's not, you know, overly shocking. So we'll keep these levels in mind. Let's see how this plays out. I certainly don't have any justification to be hunting longs here off the weekly charts. It's just hurry up and do nothing right now. And then finally, we take a look at, well, we already did look at this, but taking a look at good old big, oh, that's Ethereum. Let's head back over here. Good old Bitcoin. You know, if we do AB equals CD, the good part about this is it probably takes us right back against these lows. We're not there yet, so I don't think we have to worry too much about that breaking just yet. OBV still looking relatively uppy. Probably, you know, we do have this one new high, then a low, and then we had this test. Is this a third high? I don't know. I think I might be inclined to actually watch this as our third high. So one high, two highs. I think this high is a little bit higher. Nope, this is 101. So one high, two highs, then a third high. So if we get an up week that does less than 50,000 coins here on Stamp, then that'll be your sign that the bull has fallen asleep. But you can see OBV is still pointing up. So, and we don't really have a heck of a lot of anecdotal evidence out of the bears that they've taken over here. So, I don't know. I'm still thinking a range here. Willie never did get stupidly overbought, so that's encouraging. The only one that it looks like that went stupid was Litecoin, and I guess that makes sense considering it's happening event, and it did go up quite a bit, right? I think Litecoin had like a 4x move off the lows. You know, the double bottom was at 40, and we hit a high here of 146. So that's like 3x off the lows. All right, so if I won't really look at Litecoin or Ethereum on the lower time frames. I like to follow Bitcoin for lower time frames. You know, we did have this fairly well defined now, like I guess you could say it's almost like a quintuple top here. Was very pleased to see the algo picked up a short signal, and interesting how the algo actually went uber bear on this little doji candle here. You could have made the argument that the algo setup was off of this double top, and if that's the case, then you could actually make an argument that the 2-to-1 has already been hit. So 2-to-1 for that would have been off of that M would have been somewhere in that area there. So the dump last night actually hit that profit objective. I had this on just as a really simple reference on the dump of this massive M, and actually this one as well, with that shorting level. And interesting how its 2-to-1 basically is just looking for sort of a midpoint of the reload zone tag for a target. Interesting too, we just made new lows here. So it looked like first thing this morning, Mountain Man stepped in against his level tag and the market popped back up. I do remember this morning some people were posting, hey, things are looking turny. But I was kind of like, you know what, off of these higher time frames, Algo is not happy here right now at all. Maybe it's like a 30-minute turn, and I think that's what, let's see, this chart was. You can see some nice divergences building down in here, both on volatility measures and on price momentum measures. But in this case, because the higher time frames are just looking so bad right now, this lower time frame div didn't pan out. And if anything, this is probably a really good reiteration for everybody watching this, that we really need to follow the higher time frames. And while this is still looking very downy, M's in like price momentum oscillators, probably if we put a volatility oscillator in there, that probably also is looking M-y off the dailies. As long as this situation persists, I think you just got to cool your jets. So I don't really mind the idea of hunting lower time frame setups for, like day traders and stuff. But I really like the idea that, let the algo go uber bull, and then through this phase, as the market's working its way up, that's where you can go down to the lower time frames and hunt those bullish setups. While we're working these bearish setups, I think hunting longs right now is tough. It's like kind of like trying to like swim upstream, trying to sail into the wind, those kind of things. As long as this persists, I don't see any reason to touch this. My hunch is, in fact, good old Colleen, just looking at this price action, you can see where value high is. You can see how the market came down into sort of that level and asked, well, do I really want to go back into value? Maybe not. And then, yep, I do want to be in value. So if we actually accept into value 80% of the time, where should we go? Let's see if anybody knows the answer to that. Sure hope you do. No one? No one? Ay. Not even in the other end of value. All right, well, thank you, Colleen, you got it. So you can see where value low is. That's all the way down here. And my hunch is this tail looks awfully suspicious. I think the only other thing I wanted to comment on is what are the Chicago boys seeing this morning? I think, let's see what we got here. So we had some cheeky little gaps that needed to be filled in here. So I think that's basically what's going on now. You can see how they left a little gap in Chicago right up against these highs. So don't be shocked, guys. Remember we said this is 38.2. Don't be shocked if we're not done playing with this. And it's so ironic, that, and again, what a good example. If Goldman Sachs says the market's going to do something, if Goldman Sachs, the market says the market's going to go up, which way should we expect the market to go? I mean, it's almost funny. Goldman Sachs came out with their public comment. We have a price target of 13,900, and literally the market has gone straight down since that event. Well, not now. I mean, they have been historically. I mean, it's almost, it's almost like a Hogue 80% rule. The problem here, folks, is you can see big old hole on the charts here, and this gap still technically is open here. You can see Colleen's going to be sitting there at the top of value saying, well, do we accept back into value? Maybe we have to come down, swim against these lows, 38.2, run some stops, fill in the gap, and then go up to 13.9. That wouldn't surprise me at all. So long and short of it here, yes, Goldman has their target, but as it's clearly obvious, in fact, even what do we call, and it's not really the best example, but this is really, well, it's sort of doji-ish. It's not bad, but doji gap lower. If we lose this low, then we have to think trend, continuation in the short term, which paints down into here. So interesting little Joby gap, short-term bearish signal. And as I said, off of that massive double top, if we look at things like the forwards markets, where is that? I think it's this one. Yeah, there we are. So here is that CME contract. It was interesting. I'm not quite sure how I would have preferred to trade this uber bear signal, but on that gap lower, the Joby gap lower, of course, is a break of that low the following day. AB equals CD. Algo did technically go uber bear here. So for those people that had the kahunas to hit that, I suppose you could argue that's that M there. That trade looks like it's just working away here now. I don't see any reason to change my thinking there. One of the reasons why I thought maybe the market might find a floor there at Daniel's level this morning was the fact that we came in and filled in this gap. But looking at that higher time frame chart, that's just this action here. And there is that funny little tail down there that I just spoke about a moment ago. I still think we got to come down here and play with this. And of course we got this has just got trap written all over it. So they dump it into this level, fill the gap in, kind of like what they did here this morning, run all these stops, and then turn the market back up, maybe to hit that that price objective, that what was it, 13,900 area way up here. I don't know, tough to say. But anyway you paint it, it looks to me like the market's heading down right now. So okay, so that is the top of the hour. So I hope you guys enjoyed the presentation. The only other thing I'll leave you with is, I'm still working my offer to get out of this BTT, just FYI. But I was very pleased, and I did notice a few people were actually posting some altcoin charts in the lounge. Excellent, Colleen. So Colleen's looking for that gap on the CME futures to be filled in by October. But I did notice that Doge came down, tested the lows in earnest, and hello, there's a cute little double bottom. So go figure. Doge seems to have dodged a bullet. It might be an idea, if we're thinking that Bitcoin's rolling over here a bit, it might be an idea for us to actually start looking at a few altcoins now. See whether we have, location. Clearly we have lots and lots of location. These things are right on their knees. Do we start getting signs of divergence? And this guy, of course, painted divergence a while ago. And now are we getting some cheeky little W's? So, for those people that do play alts, I haven't played them that much recently. But if I start seeing some pretty good setups, maybe we can start taking a look at them. San saying ETH BTC starting to look interesting. I know Alex had a really important price objective for, Jesus, look at this fucking financial sector in Canada. I mean, guys, can you see how dangerous this market looks? Holy crap. We can see the Canadian banks could be in big trouble here. But anyway, we've talked lots about that. But ETH, BTC, let's see. I know Alex said that he had some interesting price objectives. I think it was on this thing. Alex, are you still on the call? Did you?
Yeah, sure.
Did this target get hit?
Nope, not at all. If you go to the weekly,
yeah,
you can see we are slowly but surely coming into that W.
Yeah, down in here, right?
That's where I'd be stalking for entries.
Yeah, I'd be careful, Sam. I don't see any W's here yet. I don't know, maybe we have things like divergences starting to form. They're still not in there yet, and Ethereum seems to be underperforming. So be careful there, okay, son? Yeah, I think you're still a little bit early. On the dailies, nice little inside bar reversal there. 1, 2, 3, 4, 5 days ago. So maybe off the lower time frames, you had a little trade set up here, right there. But I don't know. I think I'm going to err with Mr. Habsburg and just suggest caution. Now, if we can come down and test this railroad tracks inside bar reversal here and then turn back up and start making W's, okay, yeah, maybe we got something to work with there. Okay, that is the top of the hour. I do have class at 11 o'clock, so I'm going to have to wind things up here. I don't know. I would appreciate if everybody could post their sort of their impressions of this OBS version of the Daily Brief. Do you like it better than that, Jitsi? Do you like it worse? Was the audio good? Were you able to watch the video? All those kind of things, because we're still searching for an alternative, and it looks like this isn't so bad. We have like 14 people in the hangout right now, so I think this is better. We also have you can see full screen on YouTube. I'm not quite sure what the picture quality is. Hopefully it's a little bit better for you, but please understand, everybody, we're trying. That's all I can do is just try my best. Just keep on keeping on. Okay, why don't we leave it at that? Have yourselves a great day, everybody. I'll end the stream now. The only thing left to say, Mr. Mayor, do you think they got some good value today?
Yes, sir.
Excellent. So we got the mayor's approval. Have yourselves a great day, everybody. All the best, and bye for now.